Hello, this is Business Now, reaching you live from iBrandTV news studios in Lagos, Nigeria. Coming up, Senate extends the implementation of 2021 budget till May 31, 2022. Nigeria's public debt is set to exceed 50 trillion naira. United Nations Conference on Trade and Development Projects projects a global economic downturn following the ongoing Ukraine-Russia war. Western leaders to impose further sanctions on Russia. Thanks for joining us, and here are business stories making headlines at this hour. I'm Michael Nath. Nigeria's public debt is set to exceed 50 trillion naira this year, representing a 29.8% increase above the 39.56 trillion naira at the end of 2021. According to the Debt Management Office latest data, the national public debt rose by 20% year-on-year to 39.56 trillion naira in 2021 from 32.92 trillion naira in 2020. The 20% rise in the total public debt was driven by a 25% increase in external debt and 70.3% increase in domestic debt, while total external debt rose to 15.86 trillion naira in 2021 from 12.71 trillion naira in 2020. Domestic debt rose to 23.7 trillion naira in 2021 from 20.21 trillion naira in 2020. Further analysis showed that most of the increase in the public debt in 2021 was occasioned by the federal government's borrowing activities. Consequently, federal government's total debt rose by 22.8% or 6.51 trillion naira to 33.12 trillion naira in 2021 from 26.97 trillion naira in 2020. On the other hand, the debt profile of states and the Federal Capital Territory rose by 8.0% to 6.43 trillion naira in 2021 from 5.95 trillion naira in 2021. Information available on the fiscal activities of the federal government in 2022 shows that the nation's public debt might increase by 11.8 trillion naira to bring the year-end figure to a little above 51 trillion naira. The Senate on Tuesday has extended the expiration date of the capital component of the 2021 Appropriation Act by 3 months from March 31 to May 31, 2022. The extension was equal to the passage of an executive bill seeking to amend the Act. The Senate had suspended Rule 78, subsection 1 of the Senate's Standing Orders 2022 as amended before considering the bill to enable the lawmakers to expeditiously introduce and pass the bill. Consequently, the bill, sponsored by the Majority Leader, Senator Yahaya Abdullahi, passed first, second, and third readings on the sitting. Abdullahi recalled that the 2022 Appropriation Act was amended to extend the implementation year from December 31, 2021 to March 31, 2022. The Majority Leader explained that the extension of the budget period was based on the need to complete ongoing projects nearing completion. Now, truck owners have decried about 50% drop in cargoes coming into the country, sparking fears of a looming unemployment in this sector. The group also lamented a 60% reduction in haulage fares, which, according to them, might also lead to insecurity in the area, as most of the affected truckers would always look for means of survival. The former chairman, Dry Cargo Section of the Nigerian Association of Road Transport Owners, Abdullahi Inua, said the effects of the COVID-19 pandemic were still affecting the sector till date. He also blamed lack of empty containers in Europe for shipment of cargoes and high exchange rate as reasons for the drop in cargoes. According to him, activities in the port are low and there is a drop in importation. Now, the Nigeria Economic Zones Association has expressed concern over the increased movement of oil tankers in the Lekki axis of Lagos State. The association spoke after Pinnacle Oil and Gas FZE commenced its operations in the zone. The executive secretary of this association, Toyin Elegbede, made the concerns known during the association's meeting with the managing director of the Nigeria Export Processing Zones Authority, Adesoji Adesuba, in Abuja. He also noted with displeasure that efforts so far made by the association to get both the Lekki Free Zone Development Company and Pinnacle Oil Gas to resolve the emerging traffic crisis has not yielded any results. He said the development is hampering business operations within the zone. An expert has frowned at the federal government's recent action, barring over 72.77 million active telecommunication subscribers from making calls on their SIMs, stating that the registration process should be continuous. Digital journalist Wale Amin said this earlier in the day on iBrandTV's flagship morning show, Business Breakfast.
This should have been a gradual thing. It should be a continuous exercise as against mandating lines to be switched off almost instantly. So, but I think we've had a very good time. This exercise started December 2020, so that is about 12, 13 months down the line that we've had this.
That's about 40 months.
For those who have not, yes. So I think we pretty had some good time to carry out this exercise. I think the federal government, the agency itself, should have done much more, to ensure that this is a seamless exercise, because it behoves on you if you're demanding such of citizens. You should be at your best call also as an agency.
A power system analyst at Watsila, Mahmoud Abatsawa Shah, has said that Nigeria can save over 74 billion naira or $1 billion by 2030 via transition from fossil fuels. This, he said, is achievable if Nigeria pushes aggressively its Vision 30-30-30, which aims at generating 30% renewable energy to attain 30 gigawatts installed capacity by 2030. He stated this on the sidelines of Watsila Nigeria Smart Energy Forum in Lagos. According to him, the present energy system is highly based on diesel, adding that fossil fuels are quite expensive when compared to gas. He said, and I quote, "Nigeria has cheaper gas in the southern region, and if the country utilizes that gas, it will help the country save a lot. This is the total amount the country would have saved by 2030. It is an indicative value and could be more or less than that of depending on a lot of factors." He said another primary saving in fuel costs would be Nigeria saving over $84 billion if it pursues its vision of 30-30-30, deploying an accelerated 30-30-30. Also speaking, the ambassador in Embassy of Finland in Nigeria, Lina Palvaniniya, said Nigeria is not alone as regards the challenges faced by the world economies to transit into cleaner and cheaper fuel, stressing that natural gas has been identified as a transition fuel for the country. The value transactions performed through electronic payment channels rose month-on-month by 2.08% to 29.4 trillion naira in February 2022 from 28.8 trillion naira in January 2022. Similarly, the volume of e-payment transactions grew by 3.9% to 480.77 million in February 2022 from 462.4 million in January 2022. The latest data on electronic payment released by the Nigeria Interbank Settlement System yesterday showed that the volume of point of sale POS transactions fell by 1.2% to 88.9 million in February 2022 from 90 million in January 2022. However, the value of POS transactions rose by 0.23% to 575.06 billion naira from 573.7 billion naira in January 2022. The report also shows the volume of NIPS, instant payment, NIP in transactions rose by 2.09% to 355.6 million in February 2022 from 348.3 million in January 2022, while its value rose by 20% to 27.18 trillion naira from 26.6 trillion naira in January 2022. Mastercard Foundation and the Nourishing Africa Entrepreneur Support Program have partnered to train over 1,000 young Nigerian agri-food entrepreneurs to improve their business operations in the country, noting that the move is to make them become resilient and adaptive great businesses. In a statement, both parties said the partnership is focused on small-scale enterprises as it is currently wrapping up activities for the initiative. The statement added that the training was critical to increasing the resilience, growth, profitability, and sustainability of the Nigerian agri-food businesses, pointing out that the program has fulfilled these critical aspects of the initial program design and achieved impact through these multi-pronged interventions. Now, at the end of yesterday's trading session, Flour Mill Nigeria PLC share price depreciated by 1.61% to close at 30.55 naira per share, taking the market capitalization to 125.27 billion naira. The decline in share price, which was recorded by the FMCG company, can be attributed to investors' negative sentiment, which triggered sell-offs, weighing down the company's value by 161 basis points. Hence, the sell-offs in the shares of the company resulted in a loss of 2.05 billion naira in market capitalization at the close of trading activities on Nigeria Stock Exchange. The shares of the quoted company decreased from 31.05 naira per share at the start of the trading day to 30.55 naira per share, the lowest price traded at the close of the market, to represent a decline of 1.61%, which in monetary terms is 0.50 naira. Now, still to come, British Airways cancels 4 flights at Heathrow Airport. Details and more business news after this commercial break. Stay with us.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemiville family.
You're watching Business Now on iBrandTV Lagos. Now to Africa's scene. As the Russia-Ukraine war goes on, the impact on regional economies, especially those who export products to the two countries, is being felt. In Africa, countries dependent on commodities like wheat, oil, and fertilizer components, among others, are also feeling the pinch. In Ghana, the impact of a barrel of Brent crude rising all the way to $139 sometime last month has been felt at the pumps, with a litre of fuel going for about 10 cedis at some stations. The war is also impacting on the export of commodities like cocoa, as companies in Russia and Ukraine who buy Ghana's cocoa products are unable to do so now because of sanctions on Russia and a halt in productive activity in Ukraine. The following report has more on the impact of the war on Ghana's cocoa revenue. The U.S. government has revealed that emergency loans from the International Monetary Fund cushioned Kenya's economy from near collapse amid protests from Kenyans over the mounting public debt. U.S. Treasury Secretary Janet Yellen asked the U.S. Congress to continue providing support to the IMF, citing its involvement in Kenya in the wake of COVID-19 economic hardships, which triggered layoffs, pay cuts, and business closures. Ms. Yellen made the comments while pushing Congress to approve 503 billion shillings for international plans under institutions like the IMF. The U.S. had taken notice of public outcry in Kenya over a series of loans the country had received from the IMF, triggering street protests in response to what they term the government's growing appetite for debt. Foreign scene now. Following the ongoing Ukraine-Russia war, the United Nations Conference on Trade and Development has projected a global economic downturn from the earlier predicted 3.6% to 2.6% this year. According to the director UNCTAD Division on Globalization and Development Strategies, Richard Kozul-Wright, the Russian invasion of Ukraine is the main contributing factor to the potentially devastating 1% drop in projected global economic growth this year. He said that with inflation on the rise and developing countries already weighing down by a $1 trillion debt burden to pay back to creditors, the UN body decried the inadequate financial measures already taken to help them withstand exchange rate instability, rising interest rates, and soaring food and fuel prices. Ukrainian President Volodymyr Zelensky has said he cannot tolerate any indecisiveness ahead of the West imposing further sanctions on Russia. The U.S. said on Tuesday the measures will target financial and state-owned bodies, some officials and oligarchs. Media reports suggest Russian President Vladimir Putin's daughters will be among those on the list. The European Union is also expected to cut off Russian coal imports as concern over alleged war crimes increases. But Mr. Zelensky, speaking to the Irish Parliament on Wednesday, said there was still a need to convince some of the Europe who believe war and war crimes are not as horrific as financial losses to back tougher sanctions. He added that Russian oil cannot feed the Russian military machine, with Ukraine's foreign minister arguing on Twitter that an embargo on gas and oil. British Airways has cancelled 4 flights at Heathrow Airport today due to COVID-related absences on top of 74 services previously withdrawn. The airline had already signaled its intention to cancel most of the flights following the decision to reduce its schedule until the end of May. But recent high levels of staff absence due to COVID have meant further flights being called off ahead of Easter. EasyJet cancelled about 30 flights at Gatwick Airport on Wednesday. Thousands of holiday makers have seen their Easter getaways, the first holiday since the end of COVID travel restrictions, are delayed or cancelled because airlines and airports did not have enough staff to meet the recovery in demand. BA withdrew 6 flights at the last minute on Tuesday as a result of COVID absences. On Monday, it cancelled 62 scheduled flights, but 12 of them were grounded the last minute. We'll go on a short break now. When we return, we have more news updates. That's when Perpetua steps in.